Welcome to RBC's Markets in Motion podcast, recorded April 25th, 2023. I'm Lori Calvasina, Head of U.S. Equity Strategy at RBC Capital Markets. Please listen to the end of this podcast for important disclaimers. Today in the podcast, thoughts on 1Q reporting season, which got underway last week. Two big things you need to know. First, reporting season has gotten off to a decent start so far. We review what jumps out to us on the stats so far through last week. Second, the tone in company commentary on earnings calls has been balanced so far. We run through key themes in our reading. If you'd like to hear more, here's another 5 minutes. While you're waiting, a quick reminder that you can subscribe to this podcast on Apple and Spotify. Now let's jump into the details. We'll start with takeaway number 1. 1Q reporting season is off to a pretty decent start in terms of the stats through last week. With 17% of S&P results in and 5% of Russell 2000 results in for 1Q reporting season through last Thursday, when we froze our numbers, here's what jumps out so far. The percent of companies beating consensus on earnings is up versus last quarter in both indices, despite the fact that the pace of revenue beats has continued to slip. Russell 1000 companies beating consensus earnings forecasts are outperforming the broader market a bit more than usual. Russell 1000 misses are getting hit a little less hard than usual as well. Beats and misses are performing pretty much in line with historical trend among the Russell 2000 names that have reported so far, and admittedly that's a small sample. Russell 1000 and Russell 2000 companies with purely domestic revenue exposure are starting to see their earnings revision trends improve a bit. Earnings revision trends have generally been stronger for companies with high international revenue exposure over the past few months, and not surprisingly, that high international revenue cohort within the indexes has been outperforming the more domestically focused names until recently in terms of price. But it does look like this dynamic is starting to change. We're keeping a close eye on this. Looking at sectors, within the S&P 500, consumer discretionary and consumer staples have joined industrials in slightly positive revisions territory for both earnings and sales, while technology, which had been in positive territory, has slipped back a little bit. Within the Russell 2000, financials rate of positive earnings estimate revisions has returned to pandemic and great financial crisis lows. This was probably the chart that jumped out the most to us in all of our earnings updates. We did take a look back at this indicator over time and found that it got stuck at these levels for quite a while during the GFC, but it did pivot pretty quickly during the pandemic. Time will tell which one this one ends up proving to be. Moving on to takeaway number 2, there's been a balanced tone to company commentary so far. As has become our custom, our team has been reading through the earnings call transcripts of companies that have reported. Overall, the tone was pretty balanced through last week, with acknowledgement of resiliency and bright spots, along with acknowledgement of problems that have emerged and worries on the C-suite's mind. It still feels a little bit early to me to identify key themes, given how early we are in reporting season and the heavy representation of financials so far. But here's what we're hearing so far, looking a little bit deeper, and a few things that jumped out the most to us in our reading. To start with, consumers have been described as normalizing, healthy, stable, and also careful. One company noted weaker demand for pools among lower-end consumers, while one credit card company noted that restaurant and travel spend remained strong. Outside of consumers, the commentary has seemed pretty balanced between companies talking about rebounds, recovery, and improving demand in their discussion of recent trends, and those noting compounding pressures, pullback on discretionary projects, and caution induced by headlines. Outlook discussions have emphasized conservatism and second-half views. We found it comforting that one home builder expressed greater comfort with providing guidance in general. On the topic of recession specifically, most companies that addressed it acknowledged rising risks of a downturn, but weren't baking one in explicitly. Heightened uncertainty did remain a key theme, as did vigilance regarding commercial real estate. Some airtime was obviously given to the banking crisis. Impacts are still generally being described as limited, though some banks did express concern about heightened regulation going forward, and some companies noted the possibility of tightening of lending standards, an issue that's obviously been in high focus among investors already. China has still generally been referenced in favorable terms, but some companies did note that China hasn't been recovering as fast as expected, or highlighted uncertainty about the recovery. A few companies indicated they're expecting a few cuts from the Fed before 2023 is up. Others noted that inflation remains elevated and pricing remains strong. However, there was less discussion on these topics than we've been seeing. On the topic of labor, most companies acknowledged an improving backdrop. There was a more cautious tone on capital deployment generally, particularly on buybacks from the banks, which were obviously heavily represented in last week's reporters. Several companies complained about the bad weather in 1Q and its impact, and that is one thing that's really stuck in our mind going forward. That's all for now. Thanks for listening, and be sure to reach out to your RBC representative with any questions.
This content is based on information available at the time it was recorded and is for informational purposes only. It is not an offer to buy or sell or a solicitation, and no recommendations are implied. It is outside the scope of this communication to consider whether it is suitable for you and your financial objectives.